So, Elf, how do I judge how strong it is? Well, I judge strong support by how clear the level is, like very clear, and how far the stock bounced last time it was there, all right? The stock bounced 11%. For a $195 stock, that's really good. So now what's next? That's the first thing, all right? First thing, we have a very big support right there. Now, also, we have a pattern, right? I noticed when the stock is down here, I already see the angle of this, all right? I already see the angle right here telling me that that's the wedge angle. I don't need to see this. I only need to see this. I can already tell that we have a fucking wedge possible pattern here, and we're at support here, right? I don't need to see the rest of it. I know what it's going to look like. I'm already imagining what it's going to look like. Now, look. Daily chart, all right? Look, strong move up, flag off the 8, flag off the 8. Pull back to the 21.34, pull back to the 34, pull back to the 34. But now, pull back to the 21, pull back to the 21. I don't love the third pullback to the 21 as much as I love the first two. But when you add a super clear pattern to that, and you add a very strong support level, well, then that's all I need to see. Now today, what's happening? All I'm waiting, yesterday I was going to buy it over here, but I'm thinking, it's still below the 10-minute EMAs. It could just break down and dump right here. So all I need to see is it cross back on top of the 10-minute EMAs, all right? So what happens? As soon as I saw it, we were gapping up to here. I already know it's on. Why? Because 195 is a super, super duper strong key level, right? And I already know that I have good risk reward if I get in at 195, risking 193, all right? So we gap up. I see it flushed. I see it reclaim 195 long. Boom. Risking $2. All right? That's 197 is 199 is 2, 201 is 3, 203 is 4, 205 is 5, 207 is 6. And as you can see, guys, like clockwork, like I always say, when a stock goes straight up, it extends off the 10-minute EMAs. The first bounce back usually bounces. Look, when the stock goes straight down, it extends off the 10-minute EMAs. The first bounce back usually rejects. Straight up, extended off them, first bounce back. Straight down, extended off them, first bounce back. Right? Look, straight up, extended off them, first bounce back. Doesn't always mean it's going to keep going all the way up, but usually the 21.34 causes at least somewhat of a bounce. At least a rejection, especially if you're on the right part of the daily chart, right? You're thinking, oh, this has an upper trend line target, all right? It didn't hit it yet, even though it's getting pretty close, but, you know, it's getting real close. It's probably going to have one more push to the trend line, or maybe it came close enough here, but at this point, I'm already out 2/3. I'm just going to let it fucking, now I'll use the 10-minute EMAs as a guide, all right? If we start to break the 10-minute EMAs, I'll cut the rest. But I'm hoping it can break out so I can hold it as a swing. I can still hold it as a swing, give it more wiggle room, but I don't really want to let it go all the way back to my entry. So I will probably just use the 10-minute EMAs. If it breaks the 10-minute 34 and 50, I'll probably cut it. Now, all right, so that's pretty much a very easy trade on that. The other thing you guys can do is keep your Heikinachis on. Sometimes when it's end of the day, sometimes it doesn't really help as much because the gap. But look, you guys, 10-minute shot yesterday. You know, you could have bought it right on the first green Heikinachi with your stop below. Or, you know, if you start to see another pattern like this. Right? Look, you guys, this is another pattern inside of a pattern. Wedge break to the upside at the end of the day yesterday. Or as soon as you start to turn green, you can buy it right here. Or, guys, don't be afraid to go like, oh, well, the 10-minute shot is crossing back and forth. So that means the 5-minute shot's changing colors even more. So let me try the 15-minute shot, right? Let me try the 15-minute shot. Well, let's see. The 15-minute shot is still changing colors back and forth. Well, let me try the 30-minute shot. All right, so you can go to a higher time frame and get a more confirmation by the color change. Sometimes you might have to go all the way to the hourly time frame to make sure. Now look what happens, right? Now look, you guys. Look it up here. Green, 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 red. Red, 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 green. Red, green, red, green. You know, so the higher the time frame, the more confirmation you're going to have. If you waited to see this candle being green, though, you would have missed this whole move today. You wouldn't know until it closed right here. So that's why I like to use depending on the situation, right? I mean, all you needed to know about today was that as soon as it gapped out of this pattern and it gapped up over this resistance in the 10-minute EMAs, it's on and popping with the upper trend line target. So that was pretty beautiful setup. All right. Let me shut these. Oops. Now let's go look at RGLS. RGLS. All right, guys. I despise, right? I despise seeing this at the lows. I honestly, this is accumulation, you guys. This is a big accumulation pattern, which I don't really love to see at the bottom. Now, obviously, any stock that spikes that much is probably going to come back down because small caps are all turds. But it's not my favorite thing to see. When you have a daily chart that looks like this, you have a higher chance of a gap up, just selling right off, than you do of a stock that's really devoured the whole move and gone sideways for so long. That being said, we opened, guys, this is what I always talk about. Having clear room below you, all right? We opened at 230. We had a pivot right here at 215. So you're not wanting a short right on top of that. You can't do it. You have a pivot there because you probably dip and rip right off of. Now, when it got up to $3, okay, now we have a whole dollar plus a pivot. Obviously, the best pivot on the chart is right here, right? The best pivot is right here. This is the one that stands out the clearest. And until it goes much even higher. But let's look. We got that. We got a couple of pivots here, there, and everywhere. So there's definitely pivots above that we have to say, maybe this thing's going to want to go higher. We have a multi-touch pivot right here, 340. So we have a lot of pivots. I don't love when there's a lot of pivots because we don't really know what's going to happen. That being said, look. This is the other thing, all right, you guys? Look at this. Look at this. Level, levels. Dude, it's not rocket science to know that you have a better chance of a fade if you don't have a million levels. If a stock in the pre-market goes like this, it's going to have a way higher, easier chance to fade all the way back down. Remember, easy up, easy down. This is why, you guys, right? Let's break it down to intraday, right? Is this easy up? No, so this isn't easy down. But now look, easy up, easy down. Even look right here, easy up, easy down, right? But once you get down to here, where all this starts happening, right? Look, easy up comes back down to pretty much that level, easy. But now, look at all these levels you have here. There's not easy up over here, so it's not easy down anymore. All right? But that being said, this is what I was talking about live hours, all right? I'm thinking, I don't really like the way this looks. I don't like this at all because it's breaking over the pre-market high, right? Why did I take this trade? Well, let's see. All I can see is this, you guys, right? All I can see at the time is this. Hold on. Come on. All right, all I can see is this, right? This is the pre-market high. When a stock breaks over the pre-market high, yes, there's a pivot right here at $3. But I know that it's probably going to break out, whip back off $3 and start to be a dick. So the first time that it comes down below the pre-market level, I don't try to short that. It's the very first time, right? I'm not trying to short that. So now we see this, all right? Now it comes down again. It can't stay below the pre-market high, right? This is the pre-market high. The stock wicked down again, wicked up. I didn't try to short it, even though I know $3 is here. Could be a key level. All right? Now, it's starting to look like, okay, it's going to stay below the pre-market. Now it goes back up. Now, I don't want to short the break of the pre-market right here. The pre-market high break is not really what I want to short. I want to see if it can get below it and stay below it. So now we have this candle. Now I'm saying, okay, let's see if we're going to reclaim right here. Now I see that. Now I see that. Now I see that. And I'm like, all right, I'm going to leave this stock alone. All right? Now we're sitting here watching because it reclaimed. Now we have a bearish engulfing candle. Now let's see what's going to happen. This is exactly my mindset. Okay, if we can go below 280 now, we've had 2 triggers at 1 key level. For a stock that I don't love, that I really was being super patient on because I didn't love the pre-market pattern, now I've seen a stuff right here and a fake breakout right here at another key level that's higher. So we have a rejection of $3. We have another pivot right here that's even higher, which is better because it's higher. Now we have a fake breakout. Now we have a bearish engulfing candle. Now I'm super interested because now we've had 2 rejections up there. Now I'm watching to see if we can snap. Right here, I see a top and tail. Top and tail, I still know we're holding. I'm on high alert to enter as soon as this looks like it's going to snap the pre-market. And then right here, boom. Soon as this candle starts to look strong and on elevated volume and starts to break below this candle, short. Short, but my stop isn't way back up here. My stop is back over the pre-market high because it should not reclaim the pre-market high. That's it. Now we're in the driver's seat. And now we're just waiting. Now, the only way I would have added, or if you didn't enter right there, if you didn't enter on this bear flag right here, right? Remember what we talked about, guys. The candle before, fake break over the candle before, right? We make a range. We fake longs into buying. We're on top of the pre-market high. We trap longs with this candle right here. It breaks over these candles right here, right? These candles build a range right here. 2 candle range. This candle traps longs, and then it dumps. Now I'm watching. As soon as it loses that pre-market high, short. Now, the only way if you didn't enter right here would have been to fucking short a fib bounce or another bounce back up to reject over here. If it went over that, now it's invalid again because it's back over the pre-market high. So at this point on, your stop can be right here. This stock should not go back over the pre-market high or it's invalid. Now, you're in the driver's seat. That's it. But what happens? Right? When it comes all the way down to these levels, dude, as soon as you see this, you need to get out. First of all, I already told you this morning, this isn't an all-day fade chart. As soon as you see this right here, instead of making lower lows and lower highs, starts making higher lows and higher highs. It's past 10:30. Right here. Cut. Cut. High, low, high, low. Stop out right there. Boom. So that's it. Then it goes up to here, gives you another stuff trigger at the highs if you're still trading. This is a pretty good trigger right here, right? Goes up, pulls back, goes up. Boom, huge top and tail. You could short that if you want. Then the volume starts to die. You didn't get a really good fib bounce here. I think only to 50%, but so not, 50%. Ideally, you would have wanted it back up here, but it couldn't make it back over this daily pivot right here. So, but that was a great example of just being patient on a stock that you don't really love, waiting to see what you want to see. All right? I'm not going to take it on the trigger. It's too low. It's too close. I'm drawing the daily levels in real time, not drawing all this other shit. No, just the daily levels are on there. So I know, like, okay, we're at a daily pivot. But I'm not drawing all this crap like this. No, I just know. I just see them. So mainly I just wanted to see like that the pre-market high can't hold again. And that we could get a decent trade back down even though there's so many levels. Because it did have good gap stats. If it didn't have good gap stats, I would say fuck it. So that was pretty much that. That was really good for a shitty looking pre-market and whatnot. Not too shabby. Then we had what was the day 2 one? Hold on. Oh, CLRO. CLRO again, you guys, right? Look. Guys, I fucking hate this, all right? Number one, I like this daily chart the best, I'm not going to lie. Because I told you, lower high position, all right? We're in lower, if we can get up into lower high position, the problem is with this one, it's kind of a big ass range, right? But we did have a left shoulder here that made it a little tricky, all right? We had left shoulder, we got head, right shoulder. You never know where the right shoulder is going to go, right? You got a gap to fill here. There's a few things. Obviously, this is the best pivot. And there's another decent pivot right here that's really close, which ended up being the best pivot. So, this is an ultimate no-no, though, you guys. Remember in the pre-market, we said kind of like weird head and shoulder pattern? I hate, this is two times in a row, I absolutely hate when this happens before the open. If you get a pullback, a trigger at a key level, and you get a fib bounce, it's a good short. But when you get a fib bounce in the pre-market and then it comes back down, now it's no good. I don't like the second fib bounce because, like I said, you guys, in a pattern that looks like this, any pattern that looks like this, the second fib bounce right here makes a lower high, gives you a good trade, even if it's going to end up going like this and not breaking down, right? And then going higher. Even if it ends up going like that, this lower high is still a decent trade. But it already happened. Now we're shorting a lower high. That's not really a lower high because it's actually a higher high because we already had the lower high in pre-market. So they kind of fucked us by this happening before the open. If this didn't happen in pre-market, the first spike back to lower high position would have came farther back down, I guarantee you. But it didn't. So that's the whole reason why I like lower high short, because most stocks consolidate before they break out. I'm willing to bet 90% of the time that the consolidation pattern is going to make a lower high that I can short, even if it's going to go higher. Never mind if it breaks down over here and goes lower. Well, guess what? Now I have a monster short off the lower high position, right? If it ends up doing this, now I'm fucking money and I'm good. But I don't care either way because as long as I get good risk reward off this, and it's usually a little higher, you know, it's usually like more like this, a little higher, which gives me even better risk reward. You know, 61 to 78% fib. So that way there, I don't really care what it does after because I've already got the best place to short right here, risking off right here, right? Now, that and ideally would be the first bounce back to that level at the open, not in the pre-market. But, you know, you never know. It had good gap stats, so if you get a rejection like this, it's still worth a try, right? It's in lower high position, even though it's not the first lower high. Short, didn't cover anything, stopped out. Fine. Now we go up to the actual, really best place to short, the lower high. The real lower high, which is super close to the ultimate high pivot, which is obviously the best place to short. So, you know, it showed you a couple of rejections here at this pivot. You definitely could have taken it here. Then you also had the trend break. But I figured, you know what? The volume's still super high. Maybe it's going to be on top of and play games. I'll just hit the backside fib bounce. Now, unfortunately for me, I didn't want to stay at my desk till over here. But just like I tell you guys, just like I said before I left, if you're going to sit at your desk anyway and be a degen, what do you want? Well, that's 3 million shares, and that's only 1 million shares. That's a fucking 1/3 rejection. And I told you it wasn't going to make it probably back to the 61 fib. So here's the money shot right here. Keish, good job, buddy. Right here. If you're going to sit at your desk anyway, here's the money ball right here. The 50% haircut or greater in volume and the 50% fib because this dropped too far to make it back to the 61 or 78. You have to kind of judge, guys, how far it's dropped. If the stock's dropped too much and looks too weak and the volume's too dead, it probably won't make it back up to here. Or you just wait till it makes it back up to one of these levels, at least the 50% fib, and then what? Boom. That's it. Now you know where to put your stop. Bam. Shorting right here, 210, stop, 220, 2, whatever, 3, whatever, 4, 5, whatever you can get. When it's more like this, guys, when it's more over here, still near the highs, you have a better chance of it bouncing up to the 61 to 78% fib because there's still longs that think this might go higher, guys. All right, look. If you could only see this, all right, you could only see this, all right, longs still might want to buy it right here, okay? So, because long still might want to buy it, you have a high chance of it bouncing back to 61 to 78% fib up here, even though it will run out of steam and curl back down. But by the time it goes all the way down to here, right, is any longs still interested in long in this? Does any longs believe this is going to go back to the highs and break out anymore? No. So that's why they only bounce to like the 50% fib or something lower because the volume's dying. Longs now believe the top's in, has way more baggies to go through for it to go higher, so it just doesn't have the power. All you get is some short covering fucking shit right here and on low volume. And again, you guys, look, for the volume around it, where's the reversal volume? Right here. Look, low volume altogether, but still reversal volume for the short. Reversal volume. Look, reversal volume for the long, right? This is how they move. Look, reversal volume, the biggest candle around the group. Right? This is usually how it goes. This one's not so much. But for the most part, unless it's a breakdown on heavy volume, You don't want to short a breakdown of support or a breakout of support on heavy volume because you don't want to reverse trade a breakdown or a breakout. But after a stock that's going, and then the extended volume, right? It's usually pretty close to the reversal point within 1 or 2 candles. See, like right here, this one was a little more like a breakout on elevated volume. But, I don't know, you get what I mean, right? You usually get like that see this right here? This is a breakout in elevated volume. This is a breakdown right here in elevated volume. But when you get to the bottom or an extension, you usually get an elevated volume on the reversal candle. A lot of the times. Sometimes it happens 1 or 2 candles before or within the 1 or 2 candles. But sometimes it gets perfect like this. A lot of times you get perfect like that where it's very, very protruding, stands out clear. Or like that. Anyways, so that backside 50% fib bounce was nice if you stayed at your desk. If not, whatever. Don't live at your desk. Next we had ASLN, right? ASLN. I said on the watch list, because of the range, I would wait for lower high setup. I don't like, even though it's a day 2 gap down, I didn't like the range on it. I knew it was going to probably be tricky, and so it was. But now look, you guys. Oh, shit. Damn, dude. That was a big miss. Fuck. Trend break right here. 186 all the way down to fucking here. It's 54% drop. Damn. Should have took that even though it was on SSR. Because now, look, it's going all the way back to the daily 4 and 8. Look, you guys. All the way back to the daily 8. And that's where you cover right there. All right? All the way back to the daily 8 like clockwork. Daily 8 penny touch. Anyway, so look, you guys. Lower high position. But once that I saw it was on SSR, I said, forget it. Forget lower high position. Now, even though I said forget lower high position because I didn't like that it was grinding and chopping on SSR. Once you get a fake breakout of the highs, that's a trigger. That's one of my favorite triggers, a fake breakout at the highs. Now what? And now, we talked about this as it was happening on the mic, but I just said I don't like SSR, so I'm not going to take it. Some people probably still took it, and then it just snapped on the trend break. So now you have 1 trigger, fake breakout at the highs, 2 trigger, short. Boom, and it just instantly fucking cradled. So that's pretty good setup. So, that's my own thing. I hate SSR, but if you don't hate SSR, well, hey, that was a good setup. Because you got 2 triggers at 1 level, right? 2 triggers at 1 level is pretty key. I like 2 triggers at 1 level. Elf still trying to push off the 10-minute EMAs. Let's go, baby. Make your run to that daily trend line. All right. Did we have anything else today, you guys? I don't think any of the other backsides, PIK or any of them, didn't really make it high enough. I didn't hear any alerts go off. I mean, obviously, this is a level right here. But, trying to trade a drop that's dropped that far in that little spike, I mean, yeah. A little rough, right? Even if you use the intraday. Even if you use the intraday right here. Still fucking, even below the 23 fib. NVDA. Alright. First things first. 10-minute EMAs, pre-market data off. First things first. Now, guys, look how far NVDA came down. Let's go look at the daily chart. NVDA dropped so much. Guys, remember, look, I wrote this. I put this on my chart the other day in the review. It didn't come quite down to the gap fill that I wanted, but the lower high bounce is definitely coming, and I don't think that NVDA is going to be able to break out. I just think it's going to travel too fast, so I would definitely take it at lower high position. But on this, I would hope that it goes up to the 78% fib because you really can't risk 920 to 975. If you get it up towards 950, that would be a much better short because more people would be interested in it if it's closer to lower high position. So we'll definitely keep that on watch, but I would definitely want NVDA to go up, up into here would be better. Or else you're going to try to have to wait for a really good trigger and jam your stop down on the next fib, right? Or else, because you can't really risk to the true stop, the true high, unless it gets like, even still, even short at 945, because of how much this dropped, you guys, it fans out the Fibonacci so far that level to level is like fucking $30 fucking dollars. It's too much. That's why it sucks when they fucking drop this far first. You know, if this thing only dropped to here, then did a secret setup, well, guess what? That would mean that you had a fucking, you know, that would mean you could short the 78% fib, risking $20 instead of $40. So it's a big difference. The farther it drops, it kind of ruins the setup. So you have to like try to get a good trigger in the zone and then jam your stop. I think NVIDIA will usually probably do something like this. It'll start to make a range, right? Say it goes up to here. This is what you usually get on these, right? Say it goes up to here, gets into the zone that we like, starts to do like something, consolidate or something, all right? And then at the open, the day of the drop, at the open, it will do something like, you'll have this, and then the day of the drop, you'll have something like this, like a spike at the open that just instantly comes back down. So you have to be really paying attention, right? You get some kind of like boom, boom, and then you get the fucking, and then you get the unwind back to like wherever. You have to be, you know, you have to be on top of that because it happens so fast. If you look at like AVGO, for example, right here, right? See this right here is exactly what I'm just talking about, all right? AVGO secret setup that I screwed up, that I had dead to red. I shorted it. Problem was I missed it right here. No, it was AVGO. No, that was ELF, but same idea. You guys see this? You don't want to short it right on top of the 10-minute EMAs, but you literally look, spike, boom, dump, pop, bounce. Same idea. So if you can catch something like this, that would be great. And see how, you know, this one came really right up into the zone perfectly. Don't know how I missed this one, actually. Fucking, that was a little bit of a tough pattern because it's flagging, 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 flagging. Then I wasn't watching it when it did this. Boom, boom. But same idea. That's what I would want, something like that, McLovin. So we'll keep that on watch. Tomorrow, hopefully we'll do it at the open. If you noticed like that. Same thing with yeah, it just gonna depends how it sets up. So we'll keep it on watch. So we'll see. But ELF is getting close to that trend line, you guys. It's flagging right now off the 10-minute 21. It's about to push towards that trend line. Hopefully it'll break out. Any other tickets? Hey, Facebook fucking turned my ad on finally. I took off the age restrictions and they turned my ad back on. Praise the Lord. All right, guys, I don't like to make these too long, so I'll stop the recording because it's already at 28 minutes. Remember, I'm not a financial advisor. I just like to talk. All right. Thank you.